BA at Harvard and I moved back to India. And prior to that, I had worked in commercial real estate development. And there I noticed that, in these, once you finish the building, you have these grade A office premises rented out to grade A tenants like a Deloitte or an Accenture. And generally the rental yield of these finished products, if you purchase it then, is about 8 to 9%, which is very, very lucrative in the real estate space, because residential real estate is your rental yields are only 1, 2, maximum of 3%. So but on the flip side, the properties cost 20 crore, 25 crore, 30 crore. So the genesis of the idea is that what if we use technology to fractionalize this asset class and reduce the ticket size? So, at a lower ticket size, you get access to this asset class that's yielding you 8 to 9% rental yield. And then also the appreciation benefits that come along with real estate. So that's kind of the genesis of where the idea was born out of.
Okay. So, so currently, where are you at with Hbits? How has your journey been now since you founded it?
So most recently, we just closed an asset in Andheri with ICICI Bank as the tenant. It's a 25 crore asset. So far, we've done 5 assets. We have an assets under management of 80 crore.
Okay.
Assets so far are present in Mumbai, but we're looking to expand out of Mumbai to the top 6 cities in India, because you have grade A real estate everywhere, especially in the top 6 cities.
Okay.
And in terms of investors, we have investors from across the board. So we have investors from all the tier 1 cities, from tier 2 cities. In fact, we have NRI investors from Singapore, from Gulf, from Europe, from US.
Okay.
And we have offices in Mumbai, Bangalore, and NCR.
Okay. What is the average ticket size that you accept for Hbits? What's the minimum ticket size?
So right now, our minimum ticket size is 25 lakh.
Okay.
That is because currently we only want, because it's a relatively new product in the market, we only want sophisticated investors who understand the full product to invest. And that's why we decided to have a minimum ticket size of 25 lakh.
And how big is your team at Hbits?
So we have a very strong, small and lean team. So we have about, I'd say, 15 people now.
Okay.
A combination of business development, digital marketing, technology, real estate acquisitions, and back office operations.
Okay. So, so how does the investor make his return? Is it when you exit, or you give periodic rental yields? How does the...
Yeah, so I'll give you an idea of the overall structure, in fact. So generally what we do is, the model is basically, for every property, there's a separate private limited company that's formed.
Okay.
And the investor becomes a shareholder as well as a debenture holder in that SPV as per the amount that he's investing. So for instance, if it's a 25 crore property and an investor puts in 25 lakh, then he gets 1% of the shares in the company and 1% of the debentures in the company.
Okay.
And for every property, there's a separate private limited company. Now, in terms of the returns, the rentals come monthly from the tenant. So as soon as the rentals come into the company, then we distribute it to the investors as interest in the CCD. So rentals are paid out as interest in the CCD on a monthly basis.
Okay.
And then whenever there's appreciation in the property, there are 2 ways the investor can exit. One, he or she can sell his share at any point in time he or she wants, either in his personal network or come to us and list on our platform and sell. And we have no exit fee for the same. Otherwise, in 4 to 6 years, we sell the whole asset and give appreciated returns to all the investors. So investors make both monthly rental plus appreciation in the property.
Okay. And in terms of the pandemic, commercial real estate, the economic activity has kind of come to a standstill. So how has this affected, commercial real estate and some of the investments that you've made so far?
Yeah, so I'll talk about deals that we've already done as well as deals that we are going to do in the future. So in terms of deals that we've already done, I think it's a combination of our tenant selection, as well as, we look at the strength of the agreement. So during COVID until now, we have 100% collections and 0% delay in rental delays, 0% delay. Looking into the future, in the way we think the pandemic will affect commercial real estate. In fact, what we think today is the best time to acquire properties because you're getting good prices in the market, and we're seeing indicators both from foreign like in the US, you are seeing statements from all the major banks that work from home will end in the relatively near term future. In fact, some people have already moved back to office in New York, so it's just a question of being vaccinated. And in fact, in India, it'll be even more harder for this work from home concept to stick on because people live, especially people who work at these corporates or work at IT services companies, depending on where they are at in the company, but a large part of the employee base might not have the most conducive environment to work from home, both in terms of, when you're double income, no kids, you're clashing with your other partner who's working because of the limited space. Also, people might live in joint families, and internet connectivity at homes and infrastructure at home is not the same as office spaces. And I think over and above that, people want to go back to office. They want that excitement of being back in office and interacting with people and having the separate home and separate workplace. So right now we feel it's the best time to acquire properties. And in fact, in 3 to 4 years, there'll probably be, because of the pandemic, there'll be a lack in supply, but the demand will kind of pick up again. And so we see that there will be an appreciation in 3 to 4 years. Further, what we've seen is that because of COVID, a lot of people have gotten familiar with digital transactions. And because our investment process is completely digital, from discovery of the asset to understanding the full product to your final paperwork to tracking your portfolio, because it's completely online, more and more people are familiar with that. So in that sense, also, we've seen a lot of uptick for this product.
Okay. So in terms of your investors, are most of them NRIs? I mean, most of them NRIs. And do you see a lot of, there's been a lot of movement towards equity markets. Equity markets in India have seen a boom. So, and as you mentioned that people, want to move into digital. So, I mean, are you seeing this asset class? There is REITs also are there. Are you seeing an interest into real estate as an asset class, the movement from the physical asset class to this REITs and your fractional real estate kind of model? Are you seeing a shift towards that?
Yeah, so see, most of our investors are we have an even mix of NRIs and domestic Indians, about, I'd say 65-35 domestic Indians to NRIs. But a large part of our investors, even who are domestic Indians, are people who for the large part, who work at these MNCs, who work at these corporates, who themselves, their office places out of these IT parks, so they're familiar with what they're investing in, and they know what they're investing in, and they enjoy this process of being digital. It's the set of people who would rather invest online than speak to someone on the phone. In terms of moving towards this asset class, we see there's a significant amount of interest in this asset class. That's what we've seen in the last 1 year. Because REITs and us, it's kind of the underlying asset class is obviously the same. So we are seeing significant interest in this asset class. Yeah.
Fractional ownership as a concept is new to India. It's something that is getting, it's something that people still need to understand. So how do you see this concept kind of, working in India?
Yeah, so see that there are two facets to the concept that is new. One is the product, and other is the investing as a group or investing in partially. So even as a product, the asset class is relatively new to retail investors because commercial real estate before REITs and before fractional ownership, you couldn't invest 25 lakh in this asset class. But as an underlying product, it's very, very secure because you have long-term contracts with grade A tenants that give you 8 to 9% rental yields. So you're very secure, especially when that lock-in is there. Even post the lock-in, India has had single-digit vacancies in commercial real estate, and it's expected to continue, especially after the pandemic is over. And the quality of buildings also that you're investing in is much higher than a residential building. So from all angles, it's a very, very strong product to invest in. See, you might not get your 25, 30, 35% IRRs that you might get in certain stocks, but you'll get monthly healthy dividends. And then you'll get about between 5 to 10% capital appreciation as well, depending on which micro market you're in. So overall, you'll make from 15 to 18, in a good case, 20% IRR. Okay. So it's a very, very healthy product. And on the flip side, there's minimum downside risk because you're owning a hard asset at the end of the day. So compared to a stock, it's not going to go to zero. There's still certain value in the hard asset or in the property that you're owning. So that's on the product side. On the fractional side, what we've done is that we've structured it in such a way that ultimate control is with the investors. So when you sell the property, or when we sell the property, we go to the investors and we take the vote. Only if 75% of investors agree, do we exit the property. Okay. So ultimately, all the decision making is with a group of investors. Okay. And to kind of enhance that and build the market, we're trying to be as transparent as possible. So before investing or after investing, any documents that you want to see, leave and license agreement, title report, anything that you want to see, that's available for you to see on our online platform.
Okay. I think I've covered most of my questions. Is there anything that I've missed that you would want to talk about?
So yeah, I just wanted to add to what your question, how we see the market evolving is, so by the end of the year, we hope, or we expect to have assets in all the top 6 cities. Okay. We want to reach an AUM of 500 crore by the end of the year. Okay. And 5,000 crore in the next 3 years. Okay. So we see this a very attractive asset class, and we've seen that happen in the Western markets as well, where companies are scaled to having AUMs of $1 billion in 3 to 4 to 5 years. So very excited for the potential of this asset class.
Are you in talk with institutional investors as well? Does this come under a category where insurance and mutual funds can?
So we are speaking to them, and they are attracted to it because instead of investing a large corpus in one asset, we're like, why don't you diversify and put 555 crore across, say, depending on their size, across 10 assets that we list. So we are in early conversations with a few of these institutions that do invest. Yeah.